You are listening to chartingwealth.com for Friday, the 6th of November, 2015. We always look at the markets each and every day the markets are open. We always start with our three indexes and then go to gold. And we start with the total market as represented by IYY, which is a total market index fund. It's an ETF and it tracks what's going on in the market. We have a 2-day trend line that we draw to go along with our 2-day candles. The market is still above, even though we have a red down candle. It's an open down candle, so it's not a solid red one that portends bad down movements, but it still shows us that the market's pulling back. It's technically down 0.1% for the day. We do see a little bit of coming together, although not much of the MACD, the moving average convergence, divergence, and the signal line. We have the derivative oscillator losing a little bit of speed. We can see more of what's going on when we split the day in half with our 4-hour candle. We had down movement in the market yesterday. We had a crossover yesterday. When I say yesterday, I'm talking on the 4th. We're recording this on the 5th for the 6th of November. And we had a crossover in the afternoon going down. We've continued to see down movement throughout the course of the day. We have 3 solid day and a half's worth of down red candles on the 4-hour chart. Derivative oscillators also flipped over. So we are cautious at this point. We had 2 down candles just back on the 27th and the 27th of October. Then the market took off again. So we'll watch this cautiously, but after that Fed announcement yesterday, the market may start moving down. But again, we're still above the 2-day trend line. We're watching. Okay. Now let's go back to our 2-day chart, and we're going to take a look at SPY. That's a Standard & Poor 500. What do we see there? Well, we see movement passing through our 2-day trend line going down. Not good for the S&P. It is an open red box. It's not a solid red down candle. And again, to know more about what we're talking about, study the Heikin Ashi type of candles. Those are different from your typical candlesticks. That's spelled Heiken Ashi, A-S-H-I. I promise in the next couple of weeks to do a study on that and get that out to you. But you can read about it right now at Investopedia. Just Google search that if you have any specific questions. The kind of candlesticks we like to use, we find them much more accurate than regular candlesticks for helping us forecast down movements or up movements. We also see the derivative oscillator has lost some of its energy. On our charts, it's depicted as a light green or light red box. Again, that's in our indicator section. Our derivative oscillators lost a little speed, and the MACD does look like it's gotten a little bit closer on the big 2-day chart. Now let's go from that to the 4-hour, see what we see. And we actually have 4 red down candles, 1 hollow box that started yesterday when it crossed over on the morning of the 4th, and then we saw it continue throughout the course of the afternoon on the 4th and both candles on the 5th, with down movements on the wicks where the bulls were able to pull it back up as the bears pushed it down. Derivative oscillator also has flipped over and gained momentum. So continue to watch that. The market did not close on the 4-hour chart below the 2-day trend line, but that is of concern to us at this point. Technically, the SPY was down only 0.12%, so not much down, but watch it. Whenever we start seeing solid red candles, we start paying more attention to potential shifts in momentum. So let's keep watching. Now, I'm going to go back to the 2-day chart, check out the Qs. The Qs has continued to move up. Well, I say that. No, the 2-day candle is continuing to be green. It was down technically 0.29% for the day. And again, the Qs represents what? SPY is the S&P 500. The Qs is the NASDAQ 100, the technology stocks. Derivative oscillators lost some of its steam, but no way near switched over on the 2-day chart. And it looks like we might have more of a converging on that is coming together on the MACD and the signal line. But again, that concerns us when we see the market opening actually below. But let's look at the 4-hour chart and get a little bit better feel. It's showing us that the movement on the 4-hour chart is still above the 2-day. We do see down movement on 3 candles that are solid red, but again, they're not big red down candles. And again, just for the day, it was down 0.29%. We had a crossover. Remember us talking for the last few days back on the 2nd of November. I'm sorry, not on the 2nd. On the 30th, we saw a crossover, and the market has continued to never rise above that, even though we had some momentum pushing the market up. Continued to talk about that not being a positive sign for continued up movement, and now we've seen it come to fruition. Derivative oscillators also rotated over. So we are cautious on all of our big charts and all 3 of our indexes. The total market still in an up movement, not crossed over yet on the 2-day chart on our trend line, but still cautious with the down movement. Same with the SPY and the Qs. So cautiously continue to watch these for accelerated down movement. Now, let's go finally to gold. We see lots of down movement on gold on the 2-day chart, but what's the chart that really matters that works for us on gold? That is that golden 4-hour chart. What do we see there? Well, it crossed over on us back going down on the 19th, and it has continued to be a good chart, continued to move down. Again, if you were in an inverse trade on gold, that is an ETF that tracks gold inversely, and there are those that do that. It makes money actually when gold goes down, for those of you not as sophisticated as others. And what do we talk about doing? Well, we talk about you practicing. When you see rotations over in gold going down on the 4-hour chart, that's when you might think about doing a virtual trade. And again, we're not a stock calling service. We don't tell you what to do with real money. We talk about virtual trading. Would have done quite well for you if you would have invested your virtual money in an inverse fund up to this point. And gold was down 0.34%, so a little over 1/3% for the day. So continue to watch. Is gold bottoming out? Can't tell just yet. We do see the derivative oscillators losing some speed. It looks like the MACD's coming together, converging a little bit more than it had been in days past, but that's a hard call there. Just continue to watch where gold bottoms out. You start seeing green candles or green boxes, it could mean that gold's rotating over to go back up, but we don't see that yet. We're below the 2-day trend line on gold, so those runs are continuing. So that's where we ended up the markets on Thursday as we go into Friday. Hope this week has been good for you. You've been capturing the gains on the indexes and the losses on gold. We appreciate you listening to us. Follow us on Facebook and Twitter. You can also follow us on YouTube. You can listen to our videos, watch our videos there actually. Listen to us, of course, on iTunes. We appreciate if you appreciate what we do for free every day, you could do us a real favor. Let's go to iTunes, subscribe to our podcast, and also give us a 5-star rating. Lastly, if you don't have our layout, that is our stock chart layout that we use every day, includes a layout on gold and the 3 indexes that we follow, please email us. You can also ask for our 15-minute How to Read a Stock Chart course. You can get both those items by simply emailing us CW, that's in charting, as in Charting Wealth, CW at chartingwealth.com. Ask for those 2 things. We'll send them to you. Thank you so much for listening. Wish you the best from chartingwealth.com.